I want to check in with Scott Gecas. He is with Walsh Trading in Chicago, and he joins us right now. Scott, a lot of pressure, a lot of give and take here in the markets the past couple of days. We had a couple of days of pretty solid gains here on the grain markets. Is this considered to be a day of profit taking or a correction on the, first of all, on corn and soybean trade today?
I would definitely not say correction. I would say profit taking definitely coincides with the price action today. So we have very big, strong moves on the way up due to the report and everything like that. So with this week, we have China on holiday with their Golden Week holiday. So we don't expect to hear anything as far as trade war rhetoric coming out. So I expect this week to be traded purely on technicals, and that is coming through right now. The interesting thing that I want to point out is with the option flow. So with the soybeans, the calls are a little bit active, a little bit more active than the puts. Same thing with the corn market, but the skew is almost flat. We haven't seen a flat skew in quite some time, and I think that is definitely due to the big price run-up that we've had over the last few days. So with the skew flattening, that just confirms that it's a little bit more profit-taking. It doesn't necessarily mean that people are reversing positions, playing to the downside. It just looks like they're taking a little bit off the table, waiting for some other positive rhetoric to come out or positive news, and that way we can get that price continuation or follow-through per se.
We did get some new ethanol production numbers out here just a moment ago, and I was looking at the printout here. The production actually went up by 15,000 barrels a day this past week, back up to 958,000, but it's still down below that million barrel a day production. We had the 4-week average going down 14,000 barrels, down to 982,000. And something concerning there is the ethanol stocks picked up by 700,000 barrels to 23.2 million. And the good sign here, imports did drop back to zero. So that would be down from that 113,000 that we had last week. So kind of a good and bad news situation here on the ethanol production this past week. That's the latest there. And Scott, we'll come back here in just a moment and we'll analyze the latest in our cattle and hog markets right after this. Well, we're talking with Scott Gecas. He's with Walsh Trading at the edge of the trading floor in Chicago. Time to look at livestock. Scott, we had some ADP employment numbers this morning that seems to have a negative impact on the equity trade.
Yeah, so with the Dow being down as much as it is, there's that whole big story walking through with the recession fears. We had the manufacturing numbers that were really light, surprising. That's why we had that big pullback. The ADP numbers today are a little bit lighter. That's why we're continuing the downside pressure. But if you look at the overall trend in October, everyone's been talking about it. Every analyst out there has been saying that October is going to be a volatile month, usually has a little bit of downside pressure in the first half of the month. So the trend is continuing as expected. I don't really think that there's too much concern about there. We have to wait until the unemployment numbers out to get a little bit more verification on the recession fears. If the unemployment numbers come in under what is expected, then I think you're going to get a little bit more downside pressure in the stocks. Now, the interesting thing about that is if you look at the correlations between livestock and the economy, typically, if the economy is doing well, you're seeing livestock do well as well also. But with the recent pullback in the stocks, the live cattle market hasn't really had that big of a pullback. So it's been really resilient, and I think that's really due to the cutoff values being stronger than expected. The slaughter rate is still holding steady, not having those backup fears as one thought a few months ago, as well as the stronger cash trade in the cattle market as well. So that market is being really resilient compared to what the overall flow is and all the fundamentals right now.
Currently, currently on the Dow, we have it down about 487 points, so big drop in the equity trade there. Let's take a look at the cattle market, and we'll begin with that live cattle board. Oddly enough, it's turning higher, even with the big drop in the equities trade. So we have December live cattle currently a nickel higher at 109.88 after right at the open going down to test 109.20, and it bounced off of that now. February down a nickel at 116, so kind of quiet here in the live cattle market. Meanwhile, on the feeders, we currently have the November contract 67 higher. We're now at 140.85, and we had a low earlier today of 139.57. Came off of that by about 70 cents now. We have January 22 higher at 137.20. On the lean hog market, This is the one that touched limit down before the close yesterday on December. Well, now December is up 85 at 70.78. So the volatility continues, and February is currently trading about 55 cents higher at 76.65. Scott, thanks for all the information today. Always good to visit with you, sir, and look forward to talking with you again soon. Scott Gecas is with Walsh Trading, and he is located in Chicago.